Hey gang, Larry Bailey here with Mortgage Workflow Partners bringing you another weekly market update. This one happens to be for the week of February 3rd, 2025 in review. We're going to get to that, but before we do me a favor, head over to masteryencompass.com. If you use the Encompass platform for your business, you want to check out this brand new community that's open. It's free for everyone, regardless of who you work for. It's also got an iOS app and a Google Play app native, so you can stay in touch with what's going on the fly. It's also great to make sure that as information comes out, you know about it right away. Again, visit masteryencompass.com, check it out. Hope to see you there. Now let's get into this week's review for last week for what happened. First story that we're going to go through is all about the January jobs report, where there's a mixed bag. The labor sector reports that indicated a mix of strengths and weaknesses. So that's where these stories are all going to come into play. We also saw that annual home appreciation continue to show solid improvement nationwide. So we've got that January jobs report to go through. Next story is the private sector job growth surpasses projections. Interesting. We've also got an update for the job openings drop in December. That's something to talk about a lot. We've got some unemployment trends that persist. We've also got annual home appreciation forecasts that have increased. We've got a family hack of the week. And we're going to give you a summary of what to look for this week to keep your eyes on what's going on in the marketplace. So the very first story that we're going to go through is the January jobs report is showing a mixed bag. And we see here on screen, and by the way, if you want to check out this full video, head over to our YouTube channel, check out the video. You can follow along on screen, or you can just listen to me on podcast here, following the words that you see in masteryencompass.com. We see the graph here, which comes to us from information from the Bureau of Labor Statistics, that's the BLS. It reported an add of 143,000 jobs in January, which was below the forecast of 170,000. However, there was an upward revision to November and December that showed an extra 100,000 jobs, which bolstered the overall figures. The unemployment rate improved, which decreased it from 4.1% to 4.0%. Bottom line in this story is, of course, January's job report showed a combination of weaknesses such as softer than expected job growth and strengths, including a decline in unemployment and a 0.5% rise in average hourly earnings in December. While these earnings increases were prominently covered by the media, it's important to note that it coincided with a reduction in hours worked. So consequently, the average weekly earnings reflected in the actual take-home pay only increased 0.2% from December and 3.8% year over year, indicating a relatively modest improvement. And it's not what you make, it's what you take home, right? So there you go for that story. Here's the next story. Private sector job growth surpasses projections. And this information is coming to you mostly from ADP. The private sector job growth exceeded estimates in January, with employers creating 183,000 new positions versus the anticipated 150,000. December's job growth was also revised significantly higher, from 122,000 to 176,000 new jobs. Medium-sized businesses, that's 50 to 499 employees, they added the largest number of new jobs, and added 92,000 to that number. But growth was seen across all company sizes. Large firms, that's 500 or more employees, added 69,000 jobs, while small businesses, less than 50 employees, added 39,000, which was an encouraging sign after all the recent trends. So hiring across was up all across. So the bottom line of the story is, quote, we had a strong start to 2025, but it masked a dichotomy in the labor market, close quote. This is from Neela Richardson, who's the chief economist of ADP. Neela went on to say, quote, consumer-facing industries drove the hiring while job growth was weaker in business services and production, close quote. Salary increases rose slightly for those remaining on their current roles. That's up 4.7% from 4.6% from the prior month, while they declined for those changing jobs. It was at 6.8%, and then it came down to 6.8 from 6.9%. So you lost 0.1% for the job changers. The narrowing gap between pay growth for job stayers and job changers suggests that a reduction in aggressive talent poaching from other companies. So I don't know if you remember, but in prior years, we saw like an 8 or 9 point swing difference between stayers and changers. So it was like, hey, it made a lot of sense to change your job because you could really increase your income. Not so much anymore. And so that's where this idea of maybe talent poaching is not such a thing right now. We'll see how the rest of the year pans out. Job openings drop in December is this next story, and we saw a decline sharply in December, falling from 8.156 million in November to 7.6 million in January, well below forecasts and near a 4-year low. The drop was particularly pronounced in the sectors like finance, professional services, healthcare, and construction. Both of the hiring rates of 3.4% and the quit rates of 2% approached their lowest levels in almost 10 years, excluding the COVID-19 period. The reduced hiring rate poses challenges for those who are unemployed in securing new roles, while the low quit rate indicates diminished confidence in the job market, because you ain't going to quit what you got if you don't have something for sure where you're going to go, right? You just don't do it if you really know what you're doing. So bottom line here is job openings may be even fewer than reported. The rise in remote work has led to job listings posted in multiple states, likely resulting in an overcounting in the JOLTS data. That's the Job Openings Labor Turnover Survey, in case you didn't know. The ratio of job openings to unemployed person is at a 1.1 factor, significantly decreased over the peak of 2 in 2022, which suggests some underlying weaknesses in the labor market. We're going to continue on along this theme, and we're going to go to the next story of unemployment trends persist. So while the initial jobless claim modestly rose 11,000 to a total of 219,000, the more concerning trend remains the sustained increases in continuing jobless claims, and those claims grew another 36,000 to 1.886 million and have exceeded 1.8 million each week since June of 2024. The bottom line in this story, of course, is new unemployment claims remain at historically low levels. That's the good news. But the persistent elevation in the continuing jobless claims suggests that job seekers are experiencing longer periods of unemployment to try to get back to employment. Additionally, since many individuals receive benefits for only 26 weeks, the rise in continuing claims as these benefits expire also indicates a weakness in the labor sector and a slowing hiring pace, aligning with the low hiring rate reported in the JOLTS data that we've already spoken about. So it's really tough out there. If you're like one of the many, the 1.886 million people that are out there for a job, hunting for another job is tough. Lower prospects, and then also a lot more people looking for the same job. So persistence definitely pays off. And for those that are out there looking, I always tell people, if you're applying for a job somewhere, you have to explain how you're going to make money for them. How are you going to add value to their company? Forget about what you can do, generally speaking. How are you going to take what you can do and make money for the employer? And if you can do that effectively, you will have a better chance of getting that job over somebody else. That's generally what happens. I know that's what happens for me when I hire, right? When I'm out there looking for a job as an employer, I've got a pool of people that all have generally the same skills, but how can they use those skills to help me as a company when I employ them? That's what I care about. Annual home appreciation forecast increased. That's the next story. Here we go. Home prices nationwide increased modestly in December. CoreLogic reported a 0.03% rise and a 3.4% annual increase, while ICE, that's Intercontinental Exchange, noted a 0.2% rise and the same 3.4% yearly growth. CoreLogic expects a 0.2% decline in January and a 4.1% appreciation over the year ahead for home prices. That's up from previous forecasts of 3.8% and 2.4%. This upward revision is noteworthy given CoreLogic's typically a conservative estimate. The bottom line in this story is recent home price index data shows that homeownership remains a strong way for Americans to build wealth. For instance, a $600,000 home appreciating at 4% annually would yield a $24,000 gain, reflecting a solid investment return. And I always footnote this thing. That's true if you were going to sell it and not have to pay commissions or other things when you sell your home. And by the way, you got to go live somewhere unless you're dead, into which if you're dead, you really don't care about your return. Moving on, family hack of the week. Hey gang, there's a recipe on here on screen. If you want to check out this recipe, I definitely want you to get over to Mastery and Compass on our YouTube channel. You can check it out at this spot in the audio recording for the video presentation. This recipe is for chocolate chip cookies from the Food Network, and it's a perfect treat for National Chocolate Month. There you go. So February's National Chocolate Month. Obviously, we have some chocolate holidays in here if you participate in those. And if you need a reason to eat chocolate, you don't have to wait for a holiday. You can just eat chocolate. Here's what we're looking for this week, gang. Key inflation data will be released, including consumer price index on Wednesday and the producer price index on Thursday. So that's the difference between what consumers are paying for those goods and what the wholesalers are paying for those goods. That'll get some insight as far as inflation guidance. Also on Thursday, we'll see the latest jobless claims figures, followed by January's retail sales on Friday. So a lot to go on for this week. My name's Larry Bailey. Also, you should be taking care of yourself this week in terms of understanding how to master your Encompass platform. Head over to masterencompass.com. I'll see you there. Thanks, everybody. Take care.